Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at two of the insurers listed on the Trinidad and Tobago Stock Exchange, and we're talking, of course, about Guardian Holdings Limited and Sagicor Financial Corporation for their half-year results ended June 30th, 2018. Turning quickly to Guardian Holdings Limited, the company reported, or the group rather, reported earnings per share of 93 cents, which was a pretty good improvement of 12% over the 83 cents per share recorded in the half-year ended 2017. Green line items across the board, net income from insurance underwriting activities was up a whopping 85.1% from $210 to $390 million, while net income from investing activities, on the other hand, declined just around 20% from $565 million to just about $450 million. Operating profits, nonetheless, did increase from $250 to $288 million, and profit for the period increased from $193.9 to just around $216 million in total. Now, GHL, in terms of their net income by business activity, has had a significant change in the most recent reporting period. Over the past several years, income from investing activities has accounted for the lion's share of net income. However, that has since switched, with net income from insurance activities now contributing its even share towards the overall net income by business activity. In prior periods, just around 70 to 80% of income was from investing activities. Now it's just about 50-50. And that could have something to do with the new accounting standards put into force, but we'll see more about that in subsequent reporting periods. Now, overall, while the composition of income has changed, operating profit by business segment has not. And here we can see in the orange column that life, health, and pension business, the life, health, and pension business has accounted again for the lion's share of overall operating profits, as compared to property and casualty business, which did have a significant increase, just about 30%, and this was attributable to higher premium rates in the most recent period. And asset management continues to fluctuate between that $20 to $23 million figure. So at a price of $16.60, Guardian is trading at a price-earnings multiple of just around 9 times, below the sector average of 12 times, and offers investors a trailing dividend yield of just around 4.1%, which is above the sector average of 3.2%. So we've seen some nice movement in the correct direction for Guardian, and on that basis, we maintain our neutral in anticipation of stronger performance over the next few quarters. Turning quickly to Sagicor, the company reported earnings per share of just around from continuing operations of just around 47 cents per share. That's a 19% increase from the 39 cents recorded in the prior comparable period. Now, net premium revenues were up just around 20%, while net investment and other income was also up 2.7%. Overall net income for the period declined from 313 to 266 million on account of the exposure and some provisions being made for holdings of Barbados assets. However, net income attributable to shareholders or common shareholders did increase that 19%. Now, for Sagicor, in terms of their revenues by products and services, like Guardian, the majority of their revenues have been generated by the life business. And as you can see, life, health, and annuity business in purple in this case has continued a nice steady upward trend over the past 4 periods. Property and casualty, on the other hand, has been a much smaller component of revenues for Sagicor, and its banking and investment management continues to play a larger and larger role over time. Now, good news for Sagicor investors, as we can see, there has been an upward trend in terms of earnings per share over the past few periods, and on a trailing basis, we're at $1.42 TT equivalent. So investors should be looking forward to, if earnings continue in this trend, some increase in dividends over time. And that's because Sagicor has one of the lower dividend payout ratios of just around 22.8%, as compared to Guardian, for example, which has a dividend payout ratio of just around 37%. And Sagicor in this case is below the sector average of just around 33%. So at the $7.75 trading price as of Friday, Sagicor is trading at a price-earnings multiple of 5.5 times, below the sector average of 11.9 times, and offers a pretty good investment or dividend yield of just around 4.4%, well above the sector average of 3.2%. So on that basis, as well as the implicit hedge against the Trinidad and Tobago dollar. We maintain a buy rating on Sagicor. Now, in case you missed it, the NIF close and preliminary allocation data was released at the end of last week. And in a total, there was $7.3 billion in subscriptions for just about $4 billion in assets available. So quite a healthy oversubscription, just around 84% in fact. And in Series A, as we can see, there were just over $2.1 billion in bids. And investors, importantly, across all tranches got 100% of what they would have subscribed for. So other investors got just around 45% of what they subscribed for in Series A. In Series B, they got almost 100% of what they would have subscribed for, similar to individual investors who got 100%. And Series C, which was $1.2 billion in size at the final close, was actually the most heavily subscribed for, no surprise there, with insurance and pension funds seeking significant long-term assets, with over $3.5 billion in total subscriptions, but just $122 million from individual investors who got 100% of what they asked for, and other investors got just about a third of what they would have required, or 31.3%. So quite a very healthy subscription, and indeed it was a vote of confidence for the capital markets and this particular offering. And let's see how the secondary market goes, because as you know, NIF is being listed on the secondary bond exchange. That's it for this week's report. For more information, give us a call at 226-8773. Visit our website at bourseinvestment.com or email us at invest@boursefinancial.com. Have yourselves a wonderful investing week. This has been the Bourse Report.